Okay, how's everybody doing this evening? My name is Kent. Channel is Bitcoin Believer, Artificial Intelligence, and I'm about ready to tell you one of the oldest tricks in the book. Ready to be pulled off by Larry Fink and BlackRock. So I've talked about Larry Fink and BlackRock in the past, and of course, if you don't know who Larry Fink is, look him up online. Easy last name to spell, F-I-N-K. And he is the CEO of BlackRock, one of the largest investment companies in the world. I think $10 trillion under management. So right now they own, I think 85% of the S&P 500. Massive equity position in the stock market, the S&P 500. And what Fink has said here recently is that they're moving out of US equities and they're going to move on into emerging markets. And of course, cryptocurrency is Bitcoin. Meaning that they're going to leave, the oldest trick in the book is to inflate an asset, and then when you get the asset inflated high enough, find somebody to buy it at a higher price, getting out the people that, that own it at a little bit of a lower price, but get the people out. And then the higher people are going to be the people that are going to be the bag people. They're going to own this inflated asset at a price that's unsustainable, a price that really wasn't realistic to begin with. Those are the people that are going to take the hit, this inflation hit that we've had over the last few years, actually since the pandemic. So all the stimulus and all the money's created and all the things that happen, they've raised the interest rates as high as they can raise it. I hate those cars. If they raise them anymore, what's going to happen is they're going to start hurting the U.S. economy, and they're going to start hurting corporations, because corporations have to borrow money. Corporations borrow short-term money. So when you're paying off, it's like short-term loans. If their interest rates keep going up, and that gets to be a bigger percentage of their debt, they won't be able to. It won't be sustainable. So they can't raise interest rates too much anymore, and they're going to have to find new ways of keeping those high returns. And of course, Fink's going to do it through emerging markets and Bitcoin, cryptocurrency. And in the meantime, those people holding the S&P 500, they're going to take a hit. Let the train go through, like I do every night. So they're going to take the hit. The S&P 500 people, the 10 trillion that Fink has from these investment companies are actually these retirement companies, the investment from that invest for the retirement companies. And what is the standard for somebody to manage a retirement fund for employees that are putting money into retirement? It's usually reasonable, and somebody that would have a good track record, somebody that would have a lot of money under management, somebody that somebody else would look at and say, hey, they're very successful. BlackRock. So a lot of people that are contributing these 401ks and contributing to their retirement funds, they don't even know that BlackRock is the one managing the fund. And of course, this all happens with some fund manager or somebody that your retirement fund has in charge that looks for someplace to put the money for a return for your retirement. And of course, they choose someone like BlackRock, very reasonable, be a reasonable selection. Larry Fink and BlackRock, very successful. They would be the kind of people that would manage your fund. Fink would put it in the S&P 500 because it's been very successful. But now, they got all this massive amount of money, so they've absorbed all this inflation. It's in their retirement funds. Fink has bought the S&P 500. Now he claims he wants to leave the US equity market for emerging markets and of course, Bitcoin. So now that slumps, that falls down, the returns aren't as good. But the more recent returns that he has, the ones that he's going to get through Bitcoin and emerging markets, are going to be good. But the historic ones will, but they'll only look a few months out, because of course the quarterly returns, quarterly reports, we're only going to look at the last, few months of what they're doing with their equities and not the long term, which the long term is going to be. They're not going to sell the S&P 500. They're just going to watch it, basically go south. And people that are holding these funds are going to be they're going to be absorbing all this inflation, massive inflation. The feds can't raise the rates anymore. They got to find some place to offload all this inflation. They're going to unload it in these retirement funds, and the people that are going to own these retirement funds with BlackRock, they're going to absorb all this massive increase in money. And in the meantime, inflation will continue to go higher. Wages won't keep up. Asset prices will improve. People that own assets, which are the wealthy people, they will do well. People that are the wage earners, they won't do so well. They won't keep up with inflation. And this is the way the game's played. It will never go deflationary, and will never go, where they're going to continue to drop interest rates. Because if they drop interest rates and do cause a real recession or something of that sort, they're going to mess up. The people will could start to lose faith in the system, and then they will turn to something like cryptocurrency. If you have the dollar start becoming decreased in value. But as long as you're inflating, and of course what Fink always says, sticky inflation, or we'll grow our way out of a recession, when they say things like that, they're going to continue to inflate. And of course they can only raise interest rates so high before things start to go wrong. That's why the Feds, I think, are going to have to go digital, because continuing to raise rates this old-fashioned way just isn't very effective, and it's not working. So what do? You unload it in a bunch of pension funds, and then you go chasing the new markets, the ones, the Bitcoin market and the emerging markets that he finds around the world that he finds attractive. And the S&P 500, and the people in the retirement funds, they end up being the bad people. They are the losers. Like, this is exactly what happened when I was a young stockbroker in the 1980s. Run up an asset. As the asset ran up, then you sell it. And then the people that bought it at a higher price, they are the ones that end up losing, because eventually the asset falls back to some realistic figure, which is what the S&P is going to have to do. It's going to have to fall back to some realistic figure, and that's where we're going right now. So that's Fink's going to pull the oldest trick in the book on people, and they're going to end up paying for it in their retirement funds. And you could see this. You could read all this. This is very transparent when he gives his reports and when he talks about the things that they're interested in. Of course, it's very interesting what's going on right now in the equities market, because I don't think the equity market is going to continue to have this sustained growth. And of course, inflation is not going to die away. It's going to continue to keep going higher and higher and higher. They're just going to try to slow it down, and asset prices are going to increase. People's pensions and wages are going to continue to go down, and that's going to keep people working longer, and it's going to keep people in the job market, which is what they want. They want high employment. High employment makes it so they can feel like they can grow their ways out of problems. So that balances the numbers. I appreciate you watching. Thank you.